Come back, and it's time for business. Nearly half of commercial banks in the country have retained the Central Bank of Kenya rate as their base lending. This is despite the central bank having approved the use of Kenya shilling overnight interbank average as an acceptable benchmark interest rate for pricing all variable rate loans. Jimmy Mbogo has that report.
The central bank says it has received the revised risk-based pricing formula from all the 37 commercial banks in the country. However, nearly half of the banks have resolved to retain the central bank rate as their base lending rate, while others have chosen to use KESONIA as their reference rate, with a smaller percentage choosing to use both. The outcome now raising questions as to why the financial institutions would hesitate to implement a pricing model they had championed for, arguing at the time that the central bank rate was non-responsive.
If I can remember off the top of my head, I think maybe about 48% used the CBR, and about another 34% has used the combination of both the CBR and KESONIA, and then the remainder is those who have chosen to use KESONIA only.
But according to the bankers' umbrella body, the industry remains committed to ensuring that pricing of credit reflects the market condition and economic fundamentals. The Kenya Bankers Association CEO Raymond Molenje noted, and I quote, "By choosing to use the CBR, a bank allows itself to learn and accommodate system upgrades required before KESONIA use." Latest data from the central bank further shows that the average commercial bank lending rate has declined from 17.2% to 14.9%. The average deposit rate has also declined from 11.5% to 7.3%, widening the spread between the lending rate and the deposit rate, even as CBK remains optimistic that banks will continue to lower their lending rates.
We've seen a recovery in credit expansion to the private sector. And we've seen from a contraction or a reduction of 2.9% that was recorded in January of 2025, we've seen a continuous improvement in credit that is going to the private sector. And as of November 2025, we saw the expansion of the growth in credit reached 6.3%.
Jimmy Mbogo, Citizen TV, Nairobi.